Good afternoon, everybody, and welcome to the very last session for this course. So today is all about revision and a little bit about the exam. And well, as you can see from this picture, I can only say so much about the exam. All right, so I have already put these slides on a stream this morning. So if you like to grab them as I go through, well, feel free to do that. So what I'm going to do is just go through the format very quickly with you all. And then I will actually go through 2 examples as to how you should answer some of the exam questions and how you can lose marks very easily if, well, you don't read the instructions carefully. And then after that, I'm going to try to pick sort of question for each of the topics that we have covered. And we'll run through with you all, as well as highlight how you should go about answering questions like that. All right. So that is what we are going to do for today. And even though this is the last session, right, it doesn't mean that you can't contact me after this. We are still available for students to ask questions until before the exam. All right. So during your revision time, if you have any queries, right, feel free to send it to us. We'll be happy to look at them. Some of you might have already had a look at the stream site where they actually already released the exam format for this course. So some of you might have already had a chance to look at them. Now, since we had exams online, the way I have structured the format has changed a little bit from those paper-based exams, right? Because it is set on the stream side. We just have to format in such a way that it is not confusing to students. So if you had a chance to look at the pre-COVID years exam papers, the number of questions you have to attempt are quite different from the post-COVID exam question. And I'm talking for this course only. I don't know about other courses. So the post-COVID exam questions look as if you have many more questions to answer, but that is not the case. So what I have done is instead of putting one question with many different subparts, each of those subparts have now become a question. All right. So in terms of number of questions you have to answer, they're actually the same as before the COVID years. All right. So I have divided the exam questions into different sections. So section A, well, set by me. Within section A, I have about 5 questions there, and in total, they carry 26 marks. Section B is a section set by Michelle, right? So it'll be covering all the topics that she has covered with you all, and there are 4 questions there. Each of them are worth 10 marks each. And then the next section, C, D, and E, they're all set by me, and you have a choice there. All right, so you can choose any 2 of the 3 sections. And within each of those sections, there are a few questions within there, right? So like section C, we have questions 10, 11, 12, 30, and so forth. So once you pick a section, make sure you answer those questions within that particular section, right? If you pick E, make sure you answer all those 4 questions within that particular section E. Now, as I say, you only have to answer 2 of the 3. Now, sometimes I don't know why students, they want to answer all of them. Now, if you answer all of them, you could answer section C, you answer section D, and you answer section E. Our policy is normally we only mark the first two. All right. So if you answer all the sections, I will only mark sections C and D because you only have to answer 2 of the 3 sections. So don't do that because we are not going to pick the best out of the 3, right? We only mark 2 of the 3 sections. So don't waste your time, right? So you might want to go through the questions, flip through and have a look and see which is the one you think you can answer better, and choose the questions appropriately. And don't forget, don't miss out any of the questions that are shown within that particular section. So each of those sections, each one carries 17 marks. All right, so different marks are allocated for each of those, and they are actually all shown on the exam question. And lastly, very careful, you should read the front page of the exam question carefully. Those are the instructions, right? So don't forget to read them. Well, as I guess, as I have it here, I guess the next question you're interested in is to find out which topics are important or which topics are examinable. So I can say at this stage that all topics are examinable. All right. I would just highlight some points for you all because sometimes, even though I have mentioned this before, I still have queries about that. Because it is a closed book exam, all right? So you're not expected to memorize the tax rates or the fringe benefit tax rates or the resident withholding tax rates. If you're expected to do any calculation or tax calculations, the rates will be given to you as shown in this manner. All right, so those are the rates available. You'll be given the corporate tax rate, you'll be given the resident withholding tax rate. On dividends, you'll be given the trustee tax rate as well. So you don't have to memorize tax rates. Now we have covered this topic on the associated person rules, and they are important, right? Because it is a sort of anti-avoidance provision to make sure that they don't let somebody enjoy the benefit and at the same time able to escape payment of tax. So we have this list of associated person rules, and I run through a number of them with you. So if there are any questions that might have some relevance about somebody who is associated with one another, this list will be provided in the exam question, right? So it will just be a list to help you trigger your thinking about different ways of associating people, right? So we see 2 relatives, you're supposed to know that husband and wife comes under this category, or those who are within 2 degrees of blood relationship comes under this category, right? If you're looking at a scenario that involves a trust, and you might look at whether the settlor and the beneficiary of the trust, who are they? Are they associated with one another or not, right? Because according to the associated person rules, they are associated with one another. All right, so this table will be given. In the exam, in the online exam, these are all put under reference, right? So when you start the exam, I think from the first page, there's somewhere at the bottom that tells you you can click on these references. So if you click on the references, it will show you whatever rates as I've shown you here. And if there's anything that relates to associated person rules, you find that this list will also be provided. All right, then the next one is, again, many students ask me many times, even though I have said that you don't have to memorize sections of the act. So I will just repeat that. You don't have to memorize sections of the act. And for exam purposes, it's quite different for how you attempt the assignment 2. For assignment 2, you're expected to provide references, supporting references, or references to support your answer, because it is open book, right, and done at your own time. It is not done within like a 3-hour limit. So you're expected to do a bit of research, come up with some supporting references for the answers that you have provided. Now, for the final exam, you're not expected to do that. You don't have the time. It is a closed book exam. So you don't have to provide supporting references like you did for assignment 2. The other point is about goods and services tax. We did not cover in this course. We have no time for that. So just ignore GST. Right? Sometimes some students who are aware of GST, they still talk about GST when they answer the exam questions. And if you do that, you won't get any extra marks, right? Because our main focus is all on the Income Tax Act. Now, for losses, we did cover company losses, and we did have a look at the extra tests that needs to be satisfied before they can claim those losses, either in the future years or against another company in the same group. So for this course, you are made aware of those rules and about those tests that apply. You will not be asked to actually calculate them, right? How do you actually calculate the 49% tests, or how do you calculate the 66% tests, right? So no calculation involved, but be aware of these additional conditions that applies to companies when they want to claim losses. We also cover depreciation. When we look at deduction, companies or any businesses that have a depreciable property, they're allowed to claim depreciation. And again, you're not expected to memorize all the depreciation rates. If you're ever required to do any calculation of depreciation, the rates will be provided to you. All right. If there's no calculation required, of course, you don't need to know the rates at all. Now, the office expenses, which you have in your assignment 2, where you're expected to also calculate using the square meter rate, you will not be examined on the square meter rate. Now, the square meter rate, they all comes from the determination. The determination is issued by the Inland Revenue, and they're all available on the IRD website. So, of course, in the exam, you're not able to go to the IRD website. So none of the determinations will be examined. And the square meter rate is one of the good example of determinations. For fringe benefits, we did cover fringe benefits, but we were not so involved in the calculation. We were more involved with knowing whether the benefits is subject to FBT or not, right? Or does it come under the dividends regime? The fringe benefit tax topic is quite a big topic, right? And when I did this topic, I did mention to you all that we don't cover all the benefits which are regarded as attributed or non-attributed benefits. So obviously those will not be examined. We did cover the low interest rate or the low interest loan, and to know whether there is a benefit provided or not, you need to know the prescribed rate, right? So again, you don't have to memorize the prescribed rate. If you're ever required to do any calculation, the rate will be given to you, right? And obviously, if you're not required to do calculation, the rate will not be there. So that's FBT. And then we move on to property for the land transactions. The land transactions, as I mentioned to you all, our focus is on two different tests. One is the intention test, and one is the bright line test. And I did mention to you all that when we come to land transactions, it's good to be very specific as to which tests we are looking at. So I have mentioned section CB6 to you all. Now, if there is a question on section CB6, right, in the reference document, you'll be told what section CB6 is all about. So just in case you forget, you'll be shown in the reference document that section CB6 disposal refers to land acquired for the purpose or with intention of disposal. So if you have a question that asks you, is the land sale subject to tax under section CB6? If you forgot what section CB6 is all about, go to the reference document and you find that it will explain to you what is section CB6, right? It is a section that looks at whether the land is acquired for purpose or intention of disposal, because if it is, the income from disposal is taxed under section CB6. And then we move on to bright line test. Now, bright line test is a little bit more complex because it does involve dates. And to know whether the 5-year bright line rule applies or whether the 10-year rule applies, you need to know when they bought the property. And to help you to decide that, you find that if there is a question on a bright line test, you'll be given information about section CB6A, which looks at disposal within 10 years. And that is for property bought on or after 27 March 2021. And you'll be given the older section, CZ39, which refers to disposal within 5 years of acquisition. And that is for those property bought on or after 29 March 2018. So if you have a question that asks you whether those sales are subject to the bright line rule or not, the first thing is to check when was the property acquired, right? And remember when I went through this, step 1 is to look at when property is acquired, and that refers to the sale and purchase agreement. So check the date. Was it acquired on or after 27 March 2021? If that's the case, use the 10-year rule. If it was bought on or after 29 March 2018, use the 5-year rule. All right, and I think I've given you all the solution to a last year exam. And there's one question that touches on this, and that's a good example for you to try that out yourself first before you look at the solutions. Then we did have a look at residency, and we did look at tax on worldwide income. And I did mention to you all about double tax agreement, right? So some of you did mention in your assignment too, which is great. In the exam, you're not expected to know the double tax agreement. So you don't have to worry about that because there are so many of them, and you just cannot remember what is provided in each of those agreements, and we did not cover them as well, right? So what I've done is just to make you aware that we do have double tax agreement and the purposes of those DTAs. Then we move on to trust under business structures. And I have mentioned to you all that our focus is on compliant trusts. We did not touch on foreign and non-compliant trusts. So obviously, you will not be examining on foreign and non-compliant trusts. Now, sometimes students, when they read the scenario provided, they think, oh, well, it's not that clear that in answering the question, they might have to make some assumptions. Now, sometimes questions are clear-cut. If they are clear-cut, You don't have to make assumptions. And I would say in most cases, they are clear cut. But sometimes in one or two scenarios, sometimes, right, it might not be that clear cut. So if you need to make some assumptions, you have to specify your assumptions, right? Don't just assume without stating why you dealt with it in that sort of way, right? So if you state assumptions, if you make assumptions, make sure you state them in your answer, and the assumptions have to be a valid assumptions, right? It cannot be just assuming anything you like, because if you were to make any assumptions, it would change the answer totally for sure. And what I meant by valid assumption is like an example. Sometimes the question already tells you what is the person's marginal tax rate. So if it's already mentioned that the person's marginal tax rate is 33%, don't go and assume in your answer that the person's marginal tax rate is other than 33%. And I have come across in these answers provided by students where the marginal tax rate has already been pointed out to you all, and students still want to make their own assumption about the person's marginal tax rate, right? So that will be an invalid assumption, and it will not be acceptable because the person's tax rate has already been mentioned in the question. Okay. Lastly, I just want to bring to your attention about agri-tech pass. This is within the university policy about impact performance, about agri-tech pass. For agri-tech pass, the university's policy is the internal assessment must not be less than 40%, right? So it's less than 40%, no agri-tech pass can be awarded. That is for people who are not able to sit the final exam, right? So for this particular course, I don't know about others, for this particular course, if a person did not sit the final exam, they cannot apply for agri-tech pass because our internal assessment weighting is only 30% and the exam weighting is 70%, right? So bear that in mind. For some other courses, they might be able to because their internal assessment weighting is much higher. That is 40% and above. And lastly, just to make sure that you all go and read the instructions about online exam. This has been sent out to you all early as well, but I just want to remind you all again, if you haven't gone through them, please do so, all right? And if you have any queries about this online exam, please don't ask me because I do not know the solutions. You should ask the assessment services, right? Either you phone them or you email them. So let's say before exam, you have some queries, please email them with your queries, and they are the best person to respond to your query. And I'm not the person to address these exam issues. Okay. And all these other instructions, right? Please do read them carefully before the final exam. All right, so does anybody have any questions so far? No, we will carry on. Now, in the final exam, the section A, which is set by me, have a number of questions, and they are short questions. Correct. So if you already had a look at last exam question, you will have a good idea of how it is like. So those are short questions, and whereas section C, D, and E are true and false question type, right? And I'll go through some of these true, false question type. I should call the section A. This section A normally have some short questions, and what it requires you is to address the issue that is raised in that question, right? So you have to explain why you think it's taxable or not taxable, and so on and so forth, depending on what the question asks you, right? Now, you're not actually expected to write an essay. So I actually don't need you to have an introduction, a discussion, a conclusion. You don't need that, right? So just focus on the issue and address the issue. Explain them, right? Short explanation or short discussion, that will do. And how short should it be or how long it should be? Have a look at the marks allocation. If it's only 2 marks, it's pretty short. If it's 5 marks, you will expect to have a longer explanation, a fuller explanation. All right, so short or long will be driven by the marks that's allocated to that part or to that section. Then the others, C, D, and E, are set up in such a way that you're given a statement and you're asked whether that statement is true or false. When I did some of the topics with you all, I did have some quizzes for those topics, and most of the quizzes were set up in such a manner that ask you whether the statement is true or false. So in the exam, it is set out in that sort of similar manner. Some of them will have a scenario which is provided at the beginning, and then you have a number of statements which actually refers to that scenario provided and ask you whether that statement is true or false. Now, if it asks you whether it's true or false, you actually have to justify your answer, whether it's true or false. Now, if you say it's true and you don't provide any explanation, you're not going to get marks for that. So let me pick up a sample question. If you're given a scenario, or that if there's no scenario and you're given a statement, the mortgage interest on a property which is wholly occupied by the owner and his family is a tax deductible expense for the owner. So it's asking you whether the statement is true or false. Some students will just answer like that, true. They might just put true, full stop, or they might just say false, full stop. Now, if students do that, they actually don't get any marks at all, right? Because the requirement is to justify the answer. Sometimes students tend to be very brief, right? They will say false, it is not tax deductible. This is actually a correct answer, but then there's no further explanation as to why it is not tax deductible, right? So the student might get some marks, but not the full marks, because the reason, explanation, or justification is not provided, right? So it requires a fuller explanation. False, the interest is not tax deductible because it is not an expense incurred in producing accessible income, because the owner actually lives in that property, so there's no rental income. And it is a private residence, right? Therefore, we know the limitation rule, the private expenses are not tax deductible. So if you provide more thorough explanation or justification, it actually shows that you understand the general permission test, which we have covered. It also shows you that you understand the limitation rules, and the one here is the private limitation rule that applies in this particular scenario, right? So what I'm saying is don't lose marks unnecessarily. Provide your justification, provide your explanation, and well, if they're correct, you will get the full marks. Let me go through another sample question. Any income from sale of a residential property which was bought 5 years ago and which was rented out before sale by a taxpayer is assessable income. So in this particular case, you find that the property is being rented out initially, all right? And then later, the property is being sold. There is no, it doesn't ask you about particular section, and it doesn't tell you the year, but you can roughly calculate because it was bought 7 years ago, right? So roughly with you 2022 minus 7, right? It will give you roughly when it was bought. So if you say true, it is assessable income, you might get some marks. And again, there's no explanation provided as to why you think it is assessable income. So you're not going to get the full marks allocated for this question. Now you can apply the section CB6 test, or you can apply the bright line rule test as well. If you apply the section CB6, the intention to sell test, you can say, well, true, income from sale of land is accessible if it was bought with intention to resell, right? So this is the section CB6. But if it's not, then it won't be caught under section CB6. And if you think in terms of the bright line rule, that was sold within 7 years, the 10-year bright line rule also doesn't apply because the property wasn't bought before the 2021 year. Now for this type of question, sometimes you can answer the other way as well, and you won't be wrong because it depends on the explanation that you use to support whether you say it's a true or false statement. So in this case, you can say it's false if income from sale of land not accessible if the land was bought as a long-term investment property and it actually wasn't bought for resale purposes. And of course, the same second part, the bright line rule doesn't apply because it was bought before 2021. So that is my advice for you about attempting a true or false question type, right? Don't forget, right? Provide explanations so that you don't lose marks unnecessarily. Now I'll go through a few more examples with you all. And some of these are extracted from past year exam questions, and I have just updated them as well. So that is applicable for the current year. Now this is the topic on the fringe benefit tax and for dividends. And of course, we also did cover employment income. You need to have a good understanding as to whether which regime they actually fall under. All right, so this is a question that actually tests your understanding on that. There might be a scenario provided earlier, but it doesn't matter. Right, here we are told that Tarzan and Jane were already told that they are shareholder employees of this particular company, Jungle Limited. All right, and you're given a statement that there are dividend implications when Tarzan sells the car to Jungle Limited for $38,000 when its market value is $28,000. So in the scenario, Tarzan was going to sell his own car to the company. So it's selling for $38,000 when the market value is $28,000. So straight away you can see that this person is receiving, well, about $10,000 more than the market value. So Tarzan is going to benefit by $10,000. So the next question is it caught under the dividend rules or is it caught under the FBT rules? Now, this one sometimes can be a bit tricky. You know that Tarzan is a shareholder employee, and we always say that FBT takes priority over dividend rules. But don't forget that FBT only taxes or only catches non-cash benefits, right? It doesn't catch cash benefit. In this particular case, doesn't actually receive $10,000 more in cash, right? So it is a cash benefit. So if it is a cash benefit, he's also a shareholder. It is called as dividend. So it's a true statement. There are dividend implications because the $10,000 is deemed to be a dividend. Then after the company bought the car, the company actually allowed the employee to use the car. So in this case, it's Tarzan, who is a shareholder employee, is allowed to use the car. And the statement is there are dividend implications when Tarzan is allowed to use the car when it's owned by the company. So the car is available for Tarzan's use, private use as well. And Tarzan is a shareholder employee. The car is a non-cash benefit. It comes under one of the category of a motor vehicle. And therefore, this statement is false because it's not caught under the dividend rules. It's actually caught under the FBT rules. Number 3, there are dividend implications when Jane advanced $15,000 to Jungle Limited without charging any interest. Now, this one you just have to be careful. It is not the company that is advancing the money to the shareholder or to the shareholder employee. It is the other way around, right? So Jane actually doesn't benefit at all, right? So it is not a transfer of value from a company to a shareholder. So there are no dividend implications here. All right. So that is how you should attempt in answering a question like that. Now, sometimes you might be given a scenario of a situation which involves, in this particular case, a fringe benefit being provided to somebody. And I think I have gone through this scenario with you all, but I just picked this up just to revise with you all, where you find that there is a trust that owns the company, 100% of the company. So the trust is actually a shareholder, right? And a sort of a benefit is provided to Alan. And we found out that Alan is actually a beneficiary of the trust. So it depends on what benefit is this. If it is a cash benefit, it will come under the dividend rules. This is a shareholder, right? So we'll be looking at dividends. This is not a shareholder employee, it's just a shareholder. So the question here is you will have to check and see whether this benefit is provided to an associated person of a shareholder. The trust is the shareholder. So is Alan an associated person of the trust? So you will have to go through the list of associated person rules in the reference document. And you see that there's one that talks about the trustee of a trust and the beneficiary, they are associated with one another. So therefore, Alan is associated to the trust, and therefore this benefit is provided to an associated person of a trust, and therefore it is deemed to be a dividend. If I change the scenario a little bit, now we're looking at FBT rules, where you have an employer and an employee here. But the employer, instead of providing the benefit to the employee direct, he actually provides the benefit to the trust, right? So is the employer subject to FBT? Well, you have an employer-employee relationship here, but the loan is not provided to employee, it's provided to the trust. So we have to check whether the trust is an associated person of the employee or not, right? So based on the associated person rules that we have looked at earlier, a trustee of a trust and the beneficiary are associated with one another, and therefore this low interest loan is deemed to be provided to an associated person of an employee, and therefore the employer is subject to FBT. All right, example 4. Let's have a look at deductions. Well, Tarzan is a shareholder employee of Jungle Limited. The company paid $200 to Tarzan's son for running some errands for the company. So the question is, the $200 is a tax deductible expense for Jungle Limited. Is it true or false? So you find, well, this company is running a business, and if the payment made is for the business, it will be a tax deductible expense. Right? General permission test, it is an expense incurred in deriving the business income. So the other point that is worth mentioning in a scenario like that is it is paid to an associated person, Tarzan's son, of a shareholder employee. All right. So you have to think in terms of whether the payment is excessive or not, because it's payment to a relative of a shareholder employee. So if this person only works like 10 minutes and paid $200, that could be excessive. But if this person works, right, maybe a few days and get paid $200, it will not be excessive. So it's worthwhile to mention that the whole $200 will be a tax deductible expense as long as it is not considered to be excessive payment, because the payment is made to an associated person of a shareholder employee. All right, another question on deduction. This is actually a big scenario about Tarzan and Jane and Jungle Limited. Peter saw, oh sorry, this might be a different one. Peter saw a TV advertisement by an insurance company and signed up a funeral cover and paid a premium of $600 per annum. So this is for funeral cover. This insurance policy, the premium paid is a tax deductible expense. So is it a true or false statement? So again, you're going to apply the general permission test and the limitation test. And as you can see, this is totally a private expense. All right, and therefore it is not a tax deductible expenditure. All right, so I've given you some examples on a FBT dividend regime and some scenario of deductions. Right now we move on to business structure. We have covered about, well, 1, 2, 3, 4, about 4 main business structures, and within the corporate structure, we have looked at LTC and QC as well. So you need to know the differences in the income tax treatment of those different structures. In this particular case, it refers to whether this person should structure the business as an ordinary company or a look-through company. So you're asked to advise the tax implication. So you must be able to highlight the differences in the treatment of each of these items here for an ordinary company and for a look-through company. In this particular question, it asks you to specifically focus on 5 issues only, right? One is about claiming of losses. One is about distribution of profits. One is about the tax rate. One is about payment of salary to themselves. And one is about the owner exiting the business. So it has already pinpointed the issues that you should focus on. So just refer to those issues. Of course, if it's about tax rate, you should know by now that for the ordinary company, the tax rate is a flat rate of 28%, whereas for a look-through company, it depends on the marginal tax rate of the individual owners, because the income and expenses flow through to the different owners, right? So that will show you the differences between the income tax treatment. Now, sometimes the question might ask you, well, give some advantages of carrying on business using a partnership or using a trading trust, right? So sometimes it might ask you, give 3 advantages and maybe 2 disadvantages. So if that is the case, if it asks you for 3 advantages, make sure that you give 3, right? Don't just give 2, because if you give only 2, you will lose the marks allocated for the 3rd one. If we ask you for 2 advantages, make sure you give 2, right, and not just 1. Now, sometimes the question can be a bit more specific. It might say, give 4 tax advantages of carrying on business as a sole trader. It specifically mentioned tax advantages. So the advantages must be related to tax, right, as provided within the Income Tax Act. So if you list one of the advantages as the owner having control of the business, that is not a tax advantage, right? If we talk about limited liability, that's also not a tax advantage. It's nothing to do with tax, right? So if it says tax advantage, it must be focused on tax, right? For instance, if it is to do with claiming of losses, within the tax legislation, they allow the loss to be set off against the sole trader's other income. All right, so that's what I say. Read the question carefully, because you have to focus on what the question asks you to do, or what is the issue that is raised in that particular question, right? And don't just write down the answers of whatever you know. We are not going to pick out only the right answer and leave out the wrong answer. Please do not do that, okay? So address the issue raised in that question. This is another example of question which can be set on the business structure. And this is also about look-through company. And you're given some information about different owners of this company. And it asks you whether the company can elect to be an LTC or not, just based on the counted owner test, right? So it'll be good to indicate at the beginning that to be an LTC based on the counted owner test, there must not be more than 5 owners, all right? But in your explanation, you will have to refer to the scenario provided and work out how many owners there are. If there are more than 5 owners, then you say, well, they cannot make the election. If they have not more than 5, then they can make the election. So you have to go through them and apply also the associated person rules, because when we did the counted owner test, those who are associated with one another within 2 degrees of blood relationship, they are counted as one person. All right, so let me just pick this up. So you can start with anybody you like. Let's say I'm going to start with Bobby. This is Bobby Socks. Silk Heels is Bobby's de facto partner, right? So a spouse, de facto partner, they are all grouped together because they are relatives. And Jill Socks is Bobby's son, right? So this is within 2 degrees of blood relationship. Adopted daughter is also within 2 degrees of blood relationship. Bobby's father is also within 2 degrees of blood relationship to Bobby. And Zena is Bobby's sister is also within 2 degrees of blood relationship to Bobby. Then sister's daughter will be Bobby's niece, which is outside 2 degrees of blood relationship. And the friend, of course, is not related to Bobby at all. So we have up to here, up to the sister here, which is counted as one person, right? One owner. And then we have Zena's daughter, right, as another person. And then we have Nicole, who is just a friend and is not related to anybody, will be another owner. So in total, we have 1, 2, 3 owners, and therefore it satisfies the look-through counted owner test. And just referring to this test, it will be eligible to elect to be an LTC. All right, so this is just a diagram of what I have illustrated just now. So we have 1, because it's one big group, and we have Chucky, another owner, and we have Nico, another owner. So we have 3 look-through owners. So in your explanation for questions like that, it will be good to show your workings, right? How you group them up together, and then work out in total at the end how many owners there are. Another question on business structure, it could be referring to trust. And I've gone through some examples with you all on trust. And that is to understand how income from trust is subject to tax. So this is a scenario given about a family trust where there are 2 children who are the beneficiaries, and you're given the age. And we're looking at one particular year, 31st March 2022. Income derived by the trust in that year is $30,000. And the trustee decided to distribute $8,000 to Queenie on this particular date, 1 November 2022, and $5,000 to Jackie on 1 May 2022. And we're told that they have no other sources of income. And the statement is the $5,000 received by Jackie will be taxed as beneficiary income at 12.5%. Is that correct? And the distribution of $8,000 received by Queenie will be taxed as beneficiary income at 10.5%. Is that correct? Right. So for questions like that, it is very important to take note of the beneficiary age, because they could be minor beneficiary. The tax year is very important. And number 3, when was the distribution being made? Because you want to identify as to whether it is regarded as beneficiary income or not. So I've drawn up a sort of diagram here that captures the scenario. So that's the income earned, $30,000. This is the year end, 31st March 2022. And $5,000 was distributed to Jackie within that year. Right, so is the $5,000 beneficiary income or not? So Jackie is under 16. Jackie is a minor beneficiary, and the amount is more than $1,000, right? Therefore, it is not taxed based on Jackie's marginal tax rate. It will be taxed based on the trustee rate of 33%. Now let's move on to Queenie. Queenie, $8,000 was distributed to Queenie. Queenie is an adult beneficiary. All right, so the minor beneficiary rule doesn't apply here. But then we want to look at when was the distribution being made. It's made on 1 November 2022. Now, when we look at the meaning of beneficiary income, it refers to income paid within the tax year, as well as within 6 months after the tax year. So in this particular case, it's paid on 1 November 2022, which is outside the 6 months after the year end. So if that's the case, it's not regarded as Queenie's beneficiary income in the year 21-22. So if it is not beneficiary's income in 21-22, it means that it is trustee income. So this income will be taxed as trustee income in 21-22. And later on, when it's distributed to Queenie, the distribution actually comes from accumulated trustee income, right? So accumulated trustee income for a complying trust is distributed tax-free. All right, so going back to the statement, this will be false, and the second one is also false. Okay. Property. We did cover property, and these are some examples of how questions can be set for property. But I just probably have, let me see, what, another about 4 or 5 slides to go. Yep. If anybody has to leave early, that's okay. All right. By all means, do so. So property A was bought by a wealthy at the end of September 2020 as a residential rental property. Upset by the mess the tenants has made, she decides to sell them in July 2021. And the statement here is income from sale, right? The sale is accessible under section CB6. Is that a true or false statement? So if you cannot remember what section CB6 is, go and refer to the reference document, and you find that it is stated here, CB6 is about land acquired for purpose or intention of disposal. So this statement refers specifically to section CB6 only, right? So your explanation should just refer to this section. You don't have to think in terms of bright line text, because that's not the focus of this particular statement. So you will need to provide explanation as whether you think that the property was bought for the purpose of resale or not. If you think that it is bought as investment property because it's been rented out to tenants, then it will not be taxed under section CB6. Second part is about shares, right? So property A is about land. Now we are moving on to shares, which is personal property. This person bought shares because it's been doing pretty well and the person has been deriving good dividends. And then she decided to sell them because the company is not performing well and she made a loss. And the statement is the losses from selling the shares are tax deductible against his or her income. Right? I think this one should be changed to her income, but doesn't matter. Well, now losses from sale of shares, whether they're tax deductible or not, depends on if they make a gain, is the gain accessible. So for shares, we are looking at whether they bought with the intention to sell or not. Sorry, whether they bought for the purpose of selling or not. In this particular case, some of the facts are provided, which tells us that more or less she was buying shares to derive the dividend, right? So she's looking at the dividend income of those shares. If they're not doing well, she wants to sell them. So more or less pinpointing to us that she didn't buy them for the purpose of selling, but more for deriving the dividend income. So if that's the case, in a situation where she derived losses from selling the shares are also not deductible. All right. You can argue that she bought the shares for the purpose of selling, but then give your reason why you think that it will be the case. And if you think that she bought for reselling, then if she make any losses, the losses are tax deductible. Okay. Well, another scenario, she inherited antique furniture from her uncle's will. She then sold them for $10,000. The $10,000 from selling the antique furniture is assessable income under Section CB 6. I think I have put the section wrong. I should put Section CB. This one is Section CB4. CB4, all right? Because this is personal property. So now for CB4 or buying for purpose of sale, there must actually be an acquisition. So if this person inherited the property and later sells them, it will not be caught under this Section CB4 that deals with buying property for the purpose of selling, right? So you just have to explain in that way. This is about residency. I think by now you all are quite good in the residency rules, especially you've done assignment 2. You're given a short scenario that John moved to live in New Zealand on 1 January 2019, and the statement is he will not be regarded as a New Zealand resident for tax purposes. So more or less, whether you say it is a true or false statement, this one really requires you to justify why you think he is not a New Zealand resident or why you think he is a New Zealand resident. So you have to apply the permanent place of abode rule as well as the more than 183-day rule, and briefly discuss them and come down with your conclusion as to whether you think this statement is a true or false statement. Then transfer of property. I did mention to you all about people who transfer their property to their partner under the relationship property agreement. If they do that, there'll be no income tax consequences. And I've mentioned that that will be the case. It is a true statement. And what happens is, in this case, Rosie will deem to hold those shares as at the cost to Esther, right? So it's more or less like stepping in the shoes of Esther. So she just take over there until Rosie sells those shares to somebody else, that it will trigger income tax consequences, right? Because it was transferred under a relationship property agreement. All right, so that more or less gives you some idea as to what sort of questions can be set under those topics that we have covered, and what you should watch out depending on the scenario that's been provided. And always don't forget, provide your explanations to support why you think the statement is a true statement or a false statement. Now, one last reminder is we have been asked to remind students, don't forget to complete the course evaluation form. I think all of you already have them. Just to tell you all that we as a teaching staff, we actually don't get to know who completed them. What we get is just a summarized statistics, that's all, right? And the purpose of doing this survey is to help us to improve the quality of the course. So if you have time, please do fill out the survey. It closes on 20th June 2022, which is probably after the exam, all right? It is voluntary, but we appreciate if you take some time to do that. So I would like to end it here. And does anybody have any questions? If you don't have at this stage, it doesn't matter. You can always raise them later on when you start doing your revision. No, I will stop the recording now. All right. And I'll say bye to you all as well. And all the best in the exam. Don't forget tomorrow is Michelle's revision.